Well, there are quite some interesting development in the Absa Africa Financial Markets Index. Of course, we are seeing quite a number of countries, including Uganda, making headways or improvements in certain areas. Of course, Uganda made the biggest improvement in the area of enforceability and regulation, or regulation and enforceability. And this is one of the key areas that is needed to actually create that stability, that confidence among investors that are keen on investing in this market. There are countries that have done fairly better in a number of areas, like Tanzania. Of course, Kenya still has certain areas and a number of boxes to tick. But for Uganda's case, it's quite promising. But the areas, again, like I said, that Uganda needs to pay attention to see improvement. And one of those areas is, of course, the area of domestic investors, supporting domestic investors. We seem to depend a lot in critical sectors of the economy, services, manufacturing, and by extension agriculture now, where we're actually looking at more foreign investors sitting and playing a much bigger role in this particular area. Now, the report still rates Uganda's investment contribution, that's the local investment contribution, at about 14%. And if you look critically, you realize that actually we still have some good ground to cover in this particular area. And a number of people, a number of participants that actually participated in this conference or summit are pointing to the fact that Ugandans need to look at investment beyond brick and mortar and, of course, heads of cattle, and look at options that, for instance, the capital markets presents. Here you're talking about stocks, you're talking about bonds, and other options for investment. Of course, most of our people, most Ugandans, both the businesses and those that are looking for where to place money, still look at tangibles as, you know, a main or major form of investment. But we picked the minds of several players that participated in this conference to find out what the country needs to do to actually up the game in these spaces and have more Ugandans participating. Because remember, if you have more Ugandan investors, then the taxman has more space from where they can actually mobilize resources, and by extension, government has more resources at its disposal to execute its mandate to the people.
Looking at the 2022 index, I observed that Uganda's ranking climbed to 4th in 2022 from 6th last year or the other previous year. This is on account of improved environmental, social and governance incentives as well as standards. This good performance, which I expect investors and the overall private sector to take advantage of, and also continue to engage with the government on improving the business environment for even better performance on all of these indicators, is a very much welcome development. I noted that we performed very well in 4 of the 6 indices. And these are legal standards and enforceability, where we scored 90%, access to foreign exchange, 84%, macroeconomic environment and transparency, 82%, and the market transparency, tax and regulatory environment, where we scored 81%. However, I also noted that we still have massive work to do on 2 indices. That is with respect to market depth, where we scored only 46%, as well as the capacity of local investors, where we scored a miserable 14%. On those 2, that's a retake, for sure. The poor performance on these 2 may be attributed to lack of access to reliable and affordable capital, to the high cost and inefficiency of our infrastructure, especially electricity, the transport cost, but also the low adoption to technology of doing things better. Government, through our National Business Development Services, we recently launched a framework for BDS, which is being coordinated by Enterprise Uganda and my ministry, aims at strengthening management capacities of our local businesses so as to boost their competitiveness at national, regional, and international markets. We hope this will address both the market depth and capacity challenges that our local investors face. In addition, government has encouraged the capital increment for financial institutions, so as there is availability of money to lend to investors and ensure that these institutions are robust enough. In order to guarantee longer-term capital for investment, government has also established programs to support entrepreneurs through a number of funds that we've created as an alternative to what we have today. To support recovery, we put in place a small business recovery fund managed by the central bank, and in partnership, we implement it in partnership with the supervised financial institutions. We have also the parish development model, which is being implemented to take these resources to the lowest levels of our society so that we can support our enterprise development right from the grassroots. The private sector in Uganda, ladies and gentlemen, is composed of over 70% micro, small, and medium enterprises. 70% of our businesses are in that category, of which, of these MSMEs, 90% are actually micro and small informal businesses, characterized by low productivity, limited access to financial services, and poor record keeping, among others. To move ourselves from this condition, which is predominantly agrarian, informal, and sustainable, we are committed to, number one, building the capital markets to offer longer-term debt and equity financing to SMEs, attracting venture capitalists who accept higher risks, don't require collateral, and build capacity. And also building SME-focused stock exchange, given that SMEs don't meet the listing criteria for the conventional security exchange. Our commitment, therefore, is on keeping the achievements in sight and consolidating them, but most importantly, embarking on further reforms to raise money for cleaner investments through attraction of investors who are climate finance oriented. We are also trying to study other initiatives such as diaspora bonds for investment by Ugandans who are in diaspora. We are also looking very seriously on the pension reforms to deepen the financial sector, and also rationalizing our tax system so that it can be responsive to the needs of deepening our financial sector and developing our capital markets.
Thank you very much.
When we look at financial inclusion, one of the things that the PSST spoke about is what the SME sector contributes in terms of GDP, where he says 70% of the economy is driven by, SMEs. So we have a strong SME proposition, as it were, and it's an area of focus for us as we look at the medium-term plans of Absa Bank Uganda. So we will continue to play in that arena very strongly by responding to the product needs of our clients. So that remains a key area of focus. When we look at the lower personal segment, we also will be looking at products and channels that are going to bring in personal customers that are at the low end of the spectrum from a financial perspective. And we do believe that by investing in these technologies that help us provide low-end products that provide accessibility to finance is one of our ways of penetrating or bringing in financial inclusion into the financial markets ecosystem.
We're doing our best to expose Ugandans to the knowledge through our intermediaries. We're creating space for intermediaries to speak to the public through TV shows, radio shows, through our Investor Resource Persons program. And this is really a temporary catalyst because ultimately they need to be able to drive the marketing of these funds themselves. But through interventions like this, through conversations like this, that more Ugandans become aware of the benefits of investing in through the capital markets. And I think we've done a fairly decent job. We need more support in that area, more airtime. But people need to pay attention and seek out this knowledge, but ultimately act on this knowledge, because I believe we've reached more than 4 million Ugandans. So the numbers of 65 million Ugandans, 65,000 Ugandans investing, is still quite small compared to the numbers that we believe we have reached. So people need to act on this information. There's nothing that is too small to invest. With 100,000 shillings, you can put aside 100,000 shillings every month and start your investment journey. Over 5 years, that would be much more than 6 million shillings. So there's nothing like that. Like people have too small savings. The savings are too small, but the sooner they start, the better.